Hey everyone, Coach Investor back on our earnings video for today. So let's start the evening with Airbnb, then we're going to jump into Block. In the meantime, for those that want to know, Amazon, very, very good earnings. I'll do that when I have the time. But Airbnb, double beat and beat on guidance as well. And yet, at the time of making this video, the stock is down around 4% or so. Okay, I'll take it. If it's down even more, I'll even add to my position because this yet again has been a flawless quarter by management by this amazing company. And so let's start with the front page. Yes, this is real. This is only available on Airbnb actually. More on that later on. So let's first start with a couple of announcements here. So in Q2 2023, active listings grew 19% year over year with strong growth across all regions, market types, and price points. In fact, we added more net listings than in any previous quarter in Airbnb history to exceed 7 million total active listings. As for the core service, so they introduced over 50 new features and upgrades as part of their 2023 summer release, a bit like the summer editions for Shopify. For example, we introduced several initiatives aimed at increasing affordability, including new pricing tools for hosts. Since the release, more hosts have adopted our discounting tools and lowered their prices. Of course, some might say, oh, they lowered their prices, so that's going to affect Airbnb's business. Well, yes, but if they lower their prices, then more people are inclined to go with Airbnb than with another service. Then, with regards to monthly stays, so they say here that in June, nights booked for 3 months or longer grew to approximately 25% of total monthly stays compared to 18% in April. Additionally, the percentage of new active listings that offer a monthly discount has increased significantly, from 22% to approximately 50% since the 2023 summer release. And it makes sense, right? Because if you can put someone in your Airbnb for longer time, you give them a discount, that's great. Instead of just having someone 5 days here, 5 days there, you want to have that longer commitment. So it makes sense. And so this is the Barbie Malibu Dream House. I said beach house, but no, it's Dream House. And this again is only available on Airbnb. So they say here this is a one-of-a-kind listing in celebration of the premiere of Barbie the movie. They partnered with Warner Bros. And Mattel to transform a home into the Barbie Malibu Dream House, launched under our Only on Airbnb program. And to be honest, this is such a good marketing tactic. I mean, they can do this for a lot of other movies in the future, but of course, since this is very, very iconic, the pink color, etc., I mean, genius, really genius. They say here, the Dream House was an immediate sensation and is now Airbnb's most popular listing ever with 13,000 press articles and more than 250 million social media impressions since it was announced. I mean, they can do so many things with these types of marketing stunts. It's amazing. It's truly remarkable. Also, by the way, next year there's the Olympic Games in Paris. I believe they still have that sponsorship from Airbnb. Not 100% sure, it will pop up on the screen if it is. So let's start with the main numbers here. So nights and experience booked, 115.1 million. That's up 11% year over year, 37% year over 4 years. So it gives you a bit before the pandemic. Then gross booking value, $19.1 billion, 13% year over year, as well as FX neutral and up 94% year over 4 years. As for ADRs or average daily rates, that was $166 in Q2, representing a 1% increase year over year. Excluding the impacts of FX, in Q2, it would have increased 2%. Now, they did say last quarter that they expect ADR to be a bit lower. They also introduced the rooms, which is cheaper, so that will affect ADR negatively, but they're doing this to drive volume. They know very well that ADR is high, and well, in the current macro environment, higher prices is not very attractive for the tourists. And as for supply, they ended Q2 with over 7 million total active listings, their highest number yet. Active listing grew 19% in Q2 2023 compared to a year ago. For every quarter since we went public in 2020, we have seen an acceleration in the year-over-year growth of the total active listing. We saw growth in supply across all market types in Q2 compared to a year ago, including both non-urban and urban supply, We also saw an increase in supply across all regions in this quarter, within the highest growth rates in Latin America and Asia Pacific. Overall, our supply base remains highly distributed and the number of individual hosts on our platform continues to grow. This was also one of the topics that were mentioned, 2-3 quarters ago as a negative thing, saying that supply might not continue to grow, and if demand is so high, that could hurt the business, etc., etc. Clearly, that's not the case. And so, overall revenue, $2.5 billion, an increase of 18% year over year, or 19% on FX neutral basis, or 105% on a year over 4 year basis. As for net income, $622 million ex FX. It was $379 million in Q2 2022, and it was a loss in 2019. As for adjusted EBITDA, $819 million or $831 million ex FX, $711 million last year, same quarter, and a loss in 2019 of $42 million. As for net cash provided by operating activities, $909 million, that's up 13% year over year and almost 500% year over 4 years. As for free cash flow, $900 million there. I mean, it's just amazing. 13% year over year and over 640% year over 4 years. Now, as for the balance sheet and cash flows, so as of the end of the quarter, they had $10.4 billion in cash. I believe last quarter they ended with $10.6 billion, so not a huge decrease there. In May 2023, we announced a new share repurchase authorization of up to $2.5 billion of our Class A common stock. During Q2, we repurchased $500 million worth of that stock. The share repurchase program has enabled us to offset dilution from our employee stock programs. In the second half of 2023, we believe there is a reasonable possibility that we will reduce our tax valuation allowance and recognize our net operating loss, carry forwards, and research and development credits as tax assets on our balance sheet. So, they anticipate that the financial statement impact of eliminating this reserve would result in a one-time non-cash benefit to income tax expense and net income of approximately $2.5 to $3 billion, and a corresponding recognition on the balance sheet of the same amount for the value of our tax asset. So keep that in mind. Next quarter, of course, I'll remind you and myself. As for outlook, for Q3, they expect to deliver revenue between $3.3 and $3.4 billion, representing year-over-year growth of between 14 to 18% and a few points lower excluding the impact of FX. We anticipate that our implied take rate, defined as revenue divided by GBV, will be higher than Q3 of last year. GBV, gross booking value. We expect a modest sequential increase year over year in growth rates of nights and experience booked from Q2 2023 to Q3 2023, so quarter over quarter. They believe revenue growth will outpace night and experiences booked growth in the third quarter due to the continued resilience of ADR. Now, they say here, while our new host pricing tools have had a moderating effect on ADR in the quarter, we expect upward pressure on ADR from FX rates and listing type mix shift to outweigh their impact and drive a year-over-year increase in ADR in Q3 2023. Last thing here, they expect a record high adjusted EBITDA in Q3 2023 on a nominal basis and an adjusted EBITDA margin that exceeds Q3 of last year. For the full year 2023, they expect an adjusted EBITDA margin that is modestly higher than the full year of 2022. Last thing I want to mention here, I overlooked this, so Airbnb's international expansion. Last quarter, they shared that they had prioritized a number of underpenetrated markets, including Brazil and Germany, which have become two of their fastest growing markets. In Q2, both countries continued the growth trajectory, with gross night booked on an origin basis increasing 110% for Brazil and 63% for Germany compared to the same pre-pandemic period, which is pretty impressive. So, overall, what can I say? If the stock is down on this report, blessing in disguise. I say this again and again. If you see an earnings report, a double beat, raising guidance, the report looks extremely good, the stock price goes down, this is the best scenario that can happen for a long-term investor. Yes, if the stock goes up, that's great. Now, if the report is bad and the stock is up, it just doesn't make any sense. If the report is bad and the stock is down, makes sense. Again, best scenario for long-term investor is a great report, stock goes down, you get to buy a great quality for less. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. I'll see you all in the next one. Bye-bye.